Hello and welcome to the Movers and Shakers podcast. My name is Gino Barbaro. I'm the co-founder of Jake and Gino, multifamily investor, educator, father, and mentor. Today's guest is Aaron Ford. Aaron started investing in multifamily in 2018 in an attempt to replace his W-2 income and become financially free. Right now, he's involved in over 250 units with a partner in the Kansas City area. Welcome to the show, Mr. Aaron Ford.
Gino, glad to be here.
Third time's the charm, my friend.
That's
Make
right.
it happen. For those of you that don't know what I'm talking about, we've been having some technical difficulties, and I think Aaron and Gino are safe to say that we are not tech wizards. So if Gino and Aaron can get on a podcast, you listening out there can close a multi-family deal. Am I right, Aaron?
Make it happen, whatever it takes, right?
Listen, why multifamily? Let's dive into your past because I know you're in construction, you have a business background, but what led you to want to get into multifamily?
Gino, I'm really just, from a normal traditional family where everybody went to work, got a regular job, and if things worked out great, they'd get to retire someday and enjoy their life. And that's all I saw. So I kind of followed suit with just getting a regular job, trading my time for money. And I remember, sitting there stuck at a dead end job, in a dilemma because, I want more than anything to spend time, meaningful time with my family and experience things and be able to take trips, but I have to make it happen as the head of the household. And I'm trading my time for money and in essence, trading my life's moments for money. And I just stuck in this trap that most people are familiar with. And so I always dreamed about starting a business or a way out. And eventually I started my own business, quote unquote business. It wasn't really a business. I didn't know anything about running a business. I just started my own job. So I went from working at a regular job, 40 to 60 hours a week, to 80 plus in my own business or my own job. And, that when you make that leap, you have this, I had this overwhelming desire to just make it work. I couldn't let my family down. I finally made the choice to try this. So inadvertently, I began to have to work more hours and not be able to hire people and systematize anything. I wore every hat because I had to make it happen. And so thankfully I continued to try to educate myself and get out of the trap that I had found myself in. And I stumbled across the book by Robert Kiyosaki, The Cash Flow Quadrant. And it just hit me just as plain as day. That he discusses in the book the 4 quadrants that people generate income from. You got the employee, the sole proprietor, or the self-employed. And then on the right side, you have a business owner and investor. And the right side is the side that you should strive to be on, where you're leveraging other people's time and money. And so I knew right where I was. I was still on the left side of the quadrant. I just moved and owned my own job. And yes, I made a little more money. Yes, if I wanted to take off, I could go on a trip with my family, but I couldn't make any money while I was gone. Right. Everybody else had to stay at home if I had any workers, because nobody could do it. Right. Just a total owning your own job still. And so as I began to look for business systems after that book, I kept coming across, the successful seem to have their hand in real estate somewhere. And these rentals were really where it was at. I could see that if you owned a rental, you could leverage somebody else's existing system, property manager, and then get a passive return. And then if you had 20 units, you could profit $200, let's say a month in profit per door. 20 units is $4,000 a month in income. 40 is 8,000. And I was just like, this is it. This is what I need to do. Stack.
When was that time though? When did you realize that time? Give me a date, a year. Do you remember the recollection of that story that you said, wow, I'm working hard for my money, but my money's not working hard for me?
Of course I remember that time, Gino. I mean, I'm on the side of the road. My truck's broke down. I got a Bobcat on a trailer. It's our anniversary. My wife's waiting on us. It's 115 degrees. I'm just like, this is it. I got to get out of this, and I got to, but actually the moment was reading the book was my real epiphany. I was like, I got to get into this different sector. And then to continue reading books and educating, that's where I found the $200 per unit narrative and listening to Wheelbarrow Profits, every single episode that you guys ever put out. You pick up on these things. And then once I bought into the fact that I could profit in a passive way from investing in real estate, it was just, is it single family or multifamily? And then multifamily was simply just because it was a unit stacking game.
Mhm.
which I've learned is not quite the right mentality to have. This isn't just stack the units, right? And so, what's the most valuable asset in the world? That's time. Okay. Robert Kiyosaki says the definition of wealth is how much time one can sustain their quality of life without working.
Mhm.
That is created through cash flow. So
Mhm.
wealth is created through cash flow. Cash flow is created through operating business systems, which that's the part I missed. Like the
Mhm.
operating of business systems. Although I don't want to be my own manager, I hire third party management. I realized I have to manage the manager or operate that system from a high level.
I love that because it's not buy right, finance right. It's buy right, manage right, and finance right. That's the process. And it's interesting because most students, they join, they have some units, they have no units. Aaron, you were actually on the sidelines, just consuming all this knowledge, consuming all this information, stacking these units. And then a few years later, you joined Jake and Gino and said, I need help with the manage right. But let's dive into the first deal. Let's dive into your first couple of deals. And you were buying these things right and you were financing them right. What were you looking for in the assets? What was your what we call now a buy right criteria? That's what we hammer on. Like you have to look for your buy right criteria. And what I'm hearing from you is these assets have to produce cash flow right now. And I think you're in the market to find those kinds of deals.
Yeah. So first of all, jumping into the game was tough. You got to have credibility with these brokers, and
Mm-hmm.
especially that was a relatively hot time, and it's been a relatively hot time until now. And it's hard to get in the game with a broker when they can go sell to somebody else they've already sold to. So for
Mm-hmm.
me, I kind of had to decide. Well, do I cultivate these broker relationships, or I just go straight to the seller? And so I chose going direct to seller, and I put together the perfect client or the perfect seller in my mind. What would they look like? And I knew from Wheelbarrow Profits podcast that mom and pops are the way to go, right? I want to buy from somebody tired, worn out, but they also have other characteristics. They're gonna be the kind that the bootstrap it, make it happen kind of mentality. I got to go over here. You often hear them say, "You can't find anybody to do anything. You got to do it yourself. You can't trust a third party property manager. I got to go do it myself." So what are they? They're worn out, but they do have drive, hustle, dedication, right? A lot of times they were maybe inherited it or built the property, but they're just tired. So what's that person want to do? That person does not want to come get pitched by some fast talking sales guy as a part of some institution that they're not interested at all. They're gonna cuss you out. But you know what? They would be interested potentially in passing the torch to somebody who's wanting to hustle. Hey, I'm just a normal guy. That's what I am. Just a normal guy trying to stack units, trying to feed my kids. And that's what they're trying to do. So the rapport going direct to seller gave me a world of opportunity because I could take my time and we could work through the numbers together. I could help them put together an accurate rent roll or whatever their expenses look like, and then go to the bank. So that was just the strategy to get in the game in the beginning because I didn't have another option really in my mind.
I'm grinning the whole time you're saying this because in my mind, I am picturing Aaron Ford on the side of the road with his hands over the wheels, going, I can't believe this. My wife is going to kill me. I'm stuck on the side of the road. I got this Bobcat, and I'm the mom and pop. And now he's buying from an Aaron Ford. Isn't that interesting? Like you had to listen to the Wheelbarrow Profits podcast to figure out that you should be buying from yourself and that you were the mom and pop. That's what happened with Jake and myself. I was the pizza guy. I did everything. And I was the mom and pop. I had one restaurant for over 20 years. 1,500 units in 5 years. What was the difference? The difference was it wasn't buy right, finance right. It was buy right, manage right, and finance right, and scale up. And direct to seller, you're in the construction industry. For anybody in construction, drive around, look for these mom and pops. They're all over the place. These properties are distressed. Talk to property managers, talk to other construction people, talk to lawyers, talk to lenders, talk to title companies, talk to banks. They're the ones who are going to have all of these clients and customers who own real estate. And through there, you start cultivating those relationships. But just go out in your town. And if you're driving to work, go different directions, go different areas. You're going to start seeing these properties popping up. And I know people listening like, that's not in my neighborhood or my market. Trust me, I promise you, they're all over the place. I just drove to work today and I see another 3 houses up for sale that I went in a different location, different area. Everything. I mean, they start popping up. You don't notice it. But once you start saying buy right criteria, mom and pops, 10 to 30 units, you'll start seeing them everywhere. Aaron, continue along. What was that first couple of deals? What do they look like?
Yeah, so the first one was 16 unit. I remember it vividly. The lady was in her 80s. Her and her husband had built the property. Their kids are mowing. They're all doing their own maintenance as a family, and they were just tired. Ready. The husband had passed away. They were ready to sell, and I had looked at enough, read enough books, and studied the financials and high level of what I needed to see. And I knew this property, 675,000 for 16 units, 100,000 in renovation. Did some quick math, and I was like, this is something that I really need to pursue. This is a deal. And it's funny that I was committed to listening to educational material, even at that time. And I remember listening to a Wheelbarrow Profits podcast with Jamie Gruber, and he had a similar property. And it was, I don't know if it was exactly 16 or 24 or what, but he was in Michigan, and he had this. He's going through it on the podcast and how everything's perfectly fine. He's getting a 25-year amortization and all this stuff. And I remember taking this deal. I helped them write up the expenses, the income. I took it to the nearest bank, and I just walked in. No relationships at all. I had my tax filings with me. I was like, "Hey, I want to buy this property," and the loan broker was just, it wasn't in their wheelhouse, but he didn't tell me that. He just was like, you're crazy. This will never happen. This deal sucks. You can't get over 25 years is impossible. In our area, you can only get 20-year amortizations. And so, I left kind of defeated, but I reached out to Jamie. I was like, hey, give me some insight here. How'd you do this? And, so he ended up, I emailed him. He ended up calling me back. He's like, just keep looking, man. That bank's crazy, so just kept on pushing. And, I actually went to a meetup shortly after that, and met one of my partners that I still have today. And he had gone through a refinance, and he had a banking relationship, had some cash, and we just 50-50 joint ventured and took it down.
That's how you do it, people. You're patient, you're persistent, and you're willing to walk away. If you can't find the deal, you don't find the deal. You don't force it. But 16 units, now everyone's going to say, oh, well, that's a no-brainer. But when it's your first one, there's a lot of fear. There's a lot of things popping up saying, how am I going to raise rents? How am I going to take this thing over? How am I going to reposition this? You do that deal. When is it that you have the epiphany that you say, I need help. I need to join the community. And then there's something going wrong here where I'm still stacking these assets and it's not working the way I want it to work.
Yeah, that's a good question. So that 16 unit, we really dove in and did the Jake and Gino special, which we didn't over renovate. We did resurfaced and glazed and did stuff and made a nice, clean, safe, functioning Class C apartment building, and began to lease them up at market rents. And so it went fairly well. And we actually didn't refinance it, but we set it on that conveyor belt and unknowingly, and then moved on to the next. And I'm the kind of guy that likes to look for the deal. I'm not really, like I mentioned, I'm not really into this whole operational side. Came later. That's kind of the drag that comes along with it. I want to go find the next deal. I want to go negotiate it. I want to go do the due diligence. And so we find the 32 unit, we stack it on the conveyor belt, and basically this conveyor belt at the time of joining Jake and Gino, believe it or not, I mean, we had a 16, 32, 36, an 8, a 10, 21, 20. The most recent was 65. And then what happened was one day we would look at these reports when they came in, but you got to remember the new property was always the focus, and inadvertently neglecting the other properties because we thought we vetted the property manager and we trusted them completely. Here you go. This property, the majority of the construction is all done. Just set it and forget about it, right? Like we thought it was played. And it became the freedom that those managers got by us not checking in regularly, not having KPIs that we're going to be asking about or checking with them, right? The freedom just they just ran with it. And then they got to where, tenants are being neglected, the very high expenses, vacancies that we didn't even know about. We got construction escrow money to fix, to renovate units, and they're not even telling us when things are vacant. And, so then as I start to notice that these problems are occurring, or that, hey, what's going on here? Start asking pointed questions. The property managers at the time were like masters of diverting attention. Oh, well, just let's talk about it next month, or okay, we'll take that into consideration in the next month. I was always a month behind with these reports. One monthly report is definitely not enough. And we know this. You're smiling because that's not how it's done, right? So then as this conveyor belt is just full, nothing's cash flowing. We should be making, profit per unit, and there's nothing really cash flowing. Uh, and so it was like, what do you do? Let's just reach out to the pros and let's get some direction here and some coaching on how to organize this.
It's amazing. It's a great story. It's a great testament to if you do two out of the three things right, you're still okay, but you're not going to prosper. And you bought the assets right, you financed them right, but that management component is pulling it through. And it's the same thing. If you had managed these things properly and you bought them properly, but you financed them wrong, well, what's going on right now in this part of the market cycle? People are giving their deals back. And if you financed it really great and you're managing it really great, but you overpaid, your deal's not going to come to fruition as well. So it's all three of those pillars are so important to like really nail down: buy, finance, and manage. And one of the things I have to say without glossing over this is really important. Aaron puts in the work. I mean, he's come to all the events. He's gotten on the calls. He's already got a construction company going on. He's taken massive action, and all of a sudden, there's just one or two little tweaks that you need to do, and it makes all the difference in the world, doesn't it?
Yeah, absolutely. I mean, the effort portion. So you don't have to be the most talented. You don't have to be the smartest person. What you have to do is be devoted to consistent effort, and that's so important to get anything done. But there's also some layers to that effort that I'd like to bring up, because without a coach or without a little direction, over and overly somebody who exhibits excessive effort like me can find some other pitfalls. And so like what I realized was, as I began to start micromanaging is not the right word, as I began to start asset managing appropriately all these property managers in different locations, they began to start, and the same thing with some of my other businesses, they began to start just their process became let's just ask him. Let's ask Aaron. Oh, let's ask him. And inadvertently, I became the decision maker for a time in all of this, right? So, here's a little story. So my wife and I, we were actually with the family. We were on the beach. We were out parasailing in the boat and stuff. My phone was in the room, and I remember getting back at the end of the day, and I had several missed calls and voicemails and stuff, and from my other company and from property managers as well. And I began to start calling them back, and I'll never forget. It was like my aha moment. I had became too available to all of these people through
Mm.
this. So their process became, instead of figuring it out like they should, they just call me and ask me. And because I'm such a problem solver at heart, like I don't want anyone or any productivity halted because I'm not available, right? That driver, that just motivation to be available really was hampering the whole situation, if that makes sense. Because as I started to call him back, guess what? Hey, I just called you this morning. I actually went ahead and talked to this person and did this and decided to do this, and we figured it out. Call the next person. The same thing. They figured it out. Figured it out. Everybody figured it out, and it's like I was too available, being their go-to for answers. So now that I realize my goal is to look at high-level KPIs, have regular, consistent weekly meetings. We go over the decisions that you've made through the week, and then the results of those. Okay, and by the way, maybe we should try to do that one different, next time that comes up, but not at the time, if that makes sense.
Yes. A productivity hack for everybody. And I'm going to drill this down a little bit more. And I was very guilty of this myself. What we have, and what Aaron's talking about, is we have weekly level 10 meetings with our property managers on all of our properties. And what you do is don't call me on a Tuesday about a problem or what you're thinking about. Put it on the weekly level 10 document. So when we have our weekly call, we can go over it. Now, if there's a fire going on and it's a massive problem, yes. But when you train your property managers or your employees or your team members to email you or text you every single thing, there's a little problem where they had a thought or an idea, put a parking lot on your sheet. You have a sheet, put something called a parking lot and dump all those ideas there. So you have those weekly touch points, and everyone's going to say, well, property management companies don't want to get on a weekly call. Well, then I don't think they're the right fit for you, because you have to set the expectations with them, and you have to let them know how amazing of an idea it is, how this 30-minute call once a week will save them hours a week, and it'll be much more dialed in. I'll know what to expect from you. You know what to expect from me. If you need a purchase order or something done, we can talk about it on that call. You don't have to keep, interrupting my day. I don't have to interrupt your day. So that one little hack can save you hours and thousands of dollars. And then, like you said, you're empowering them. You're giving them the opportunity to come up with a solution. And it's always like, oh, how would you like to proceed? What are your thoughts? And then all of a sudden they start thinking about solutions, and they may even have better ideas than you. That's the idea. You can't have that bandwidth where you're trying to work on 6 different properties, 2 different companies, and all of a sudden you have this little problem pop up. There's certain times when you have to have your team members take the reins. So big kudos to you. Anything else pop up with property management that you want to share with the listeners?
Yeah, while you were talking, it reminded me. So I understand what it's like with that limiting belief that you can't find a manager to follow. Because when we came into the program and we decided through the coaches that okay, managing a third party manager is best for our situation, we had to actually go out. Portfolio wide, 3 property managers in different locations at one time had to be fired and replaced, and so the interview process with the new ones, because I had the same type of limiting beliefs. Hey, it's going to be hard to get any manager on board. And to be honest, some of them were like, a lot of property managers have that kind of alpha personality where they are, oh, you don't trust me. I've been doing this for this many years. Look at all the properties that I manage. That's great. If they have that attitude, then move on to the next. But I just kept looking, and we ended up finding 3 what appears to be perfect property managers, and that we laid out the process in the beginning. We're not going to tell that we didn't tell the managers what software to use. And although I'd like them to use Appfolio, but we didn't tell them that. What we did say is, are you willing to follow our asset management process? Mm-hmm. And it's basically a shared document, like Gino was alluding to, that is for each complex, that goes over KPIs and certain metrics. Like we have yearly goals, quarterly priorities that we can, as owners, set for the team, even weekly to-dos that we can set for the team, for their team, right? Because we're all a team now, and we're just kind of managing their players a little bit. And then obviously you have the leasing metrics, the financial metrics, and then the construction metrics on one doc. And so as anybody can edit those in real time, we can see them on our, we can tell them what to do, right? And we have these weekly meetings. But when you lay it out, here's what's expected. And yes, it's going to make everybody's life easier to keep everything organized, right? You will find people that'll be on board with this. And that's the team members you're looking for.
Man, that is all. I mean, like, you've laid it out. I mean, if anyone's looking to get it into third party and manage them, go back and listen to what Aaron just said, because he's laid it out. You start the relationship by saying, are you willing to work with our system? We'll show you our system. We're going to hold you accountable, but you're going to hold us accountable, because we need to be on those calls. And we want to make sure that we're serving our residents. We want to make sure that we're serving you as a company. We're not wasting your time. And we also have to really, and you don't have investors, but you say, hey, we're serving our investors. So there's 3 different kinds of people that you're serving here. You're being a fiduciary. And when it comes down to it, I know property management is a thankless job, because when everything's going great, no one complains. When everything's going bad, you get yelled at, you get screamed at. And actually, when you're doing a great job, they fire you because they sell the property. So it's one of those things that is thankless. So go into that relationship saying it's a hard job, but at the same time, you have to also let them know that people are living in these residents, not tenants, are living in apartment homes, not units. This is really personal to somebody. And I think when you're just looking at it as a unit count and trying to scale, you lose that perspective sometimes. You're dealing with people's memories. You're dealing with something personal. And if you can sort of try to bring that personal touch and that customer service through the property management company, that will keep resident retention at a high. You won't be having these units being turned. So big kudos to you. I mean, it's been a lot of work over the last year. The journey's been going great, hasn't it?
Yeah, I mean, it couldn't be better. I mean, we just implemented a lot of the stuff that the coaches encouraged, and I've heard you talk about the 5-day term policy, just the little things that mean a lot in this whole process. And these shared docs. I'll just add one thing. You might consider, what worked for me was actually filling out the form with them online myself for the first few meetings. And
Yes.
then because they'll get the updated version immediately after we talk, but then to encourage them after a few weeks, hey, you're familiar with the system. I'm busy this week. Could you go ahead and fill out those metrics, and then I'll catch you on the Monday call, or something along those lines, right? And then
Yeah.
you have actually brought them in where they're confident with your system in a way that's not like, hey, from day one, you go in here and you fill out all these metrics, and just something to consider that worked for me.
Dude, that is genius, because for anybody listening, anyone in the Jake and Gino community, they have the manage right. The property management systems are there. All the documents are there. So I challenge any of the students right now, any of the members right now listening to this, go on there, access them, and then get on the calls with your property management companies and walk through it with them, empower them, let them know how important it is to create a property log for every one of your properties. Every single one of your properties should have a property log. You should know how many units, you should know the address, you should know the providers for utilities, you should know who's landscaping the property, who's doing the pest control, who's doing the HVACs, when you change the HVAC filters, how many times a year you're cleaning gutters, when was the last time the buildings were power washed, and on and on and on. Once you fill it out with them, you're getting on the weekly calls, you're looking at that doc, making sure that, hey, there's nothing coming on, and then attaching that to your quarterly priorities that hey, this quarter power washing is going to happen. You don't have to think about it, and that's how you scale. You can't, you have 2 or 3 properties, you don't really have to worry about that. But that's not the goal, because once you start buying a couple of properties, you figure out how to buy them. But the manage rights systems and putting those in will allow you to scale and will allow you to actually profit and make money on these assets. What's in store for Aaron next? What are you looking at next? You looking to continue to scale?
I'm just looking to stay consistent with touching potential sellers.
Mm-hmm.
A lot of the stuff might not pencil out, but it doesn't matter. I need to stay consistent with what I do, which is finding deals.
Mm-hmm.
So that's my goal, is to continue to try to go direct to seller, cultivate relationships, and hope that some of these people, when they want to sell, think of me. And so, like I said, the rates we all talk about, we all know. Yes, sometimes it's hard to put a deal together, but as the pain, if there comes pain, as it progresses, who are they going to think about? Right? That's who I want to
Mm-hmm.
be.
That's awesome. You think about the long termism, you're thinking about this as a business now. Now, all of a sudden, you're not just an investor, you're an entrepreneur in multifamily. I think that's the shift that you had. And what I think is really cool is you have these assets on what we call that imaginary conveyor belt. Now, these assets are starting to like matriculate and go along and start getting longer and longer. You're holding them longer. And when rates do drop, they eventually will drop. You're going to be in a position to refinance out a lot of that equity, because you're saying to yourself, well, where am I going to get money for the next deal? The money is sitting there locked in that equity. So it's really, really, really cool to see that. Aaron, where can the listeners get a hold of you?
You can go to my website and send a message if you like, securemultifamily.com or anything. I'm on all the social media platforms.
Securemultifamily.com.
Yeah. Yeah.
This is going to be a little it's going to be enjoyable for me to wrap this one up, because I've got a lot of images in my mind from a guy who started out working at a job to having a genius idea to say, hey, I want to become my own boss. So what's he do? He becomes his own boss at another job, and he continues to work harder and longer. But when he decides to go on vacation, hey, he can go on vacation, but the job stopped, because everything's got to flow through the guy, right? He's the guy. I'm going to do this. I'm going to do that. I even know a guy like that, and his name is Gino. But when I'm a guy's driving the truck one day and gets stuck on the highway, and his wife's going, bro, come on. We're supposed to be going out. The pain is there. The pain is real, and the struggle is there. And he comes to a realization, I've been doing things wrong. I've had these limiting beliefs, and I'm doing stuff wrong. And ultimately, I think the pain came down from he's letting his wife down. He's letting his family down, and his money's not working hard for him. He was taught to work hard for his money, like a lot of us, but you need to have your money working hard for you. He picks up the book, The Cash Flow Quadrant, and those 4 quadrants. I recommend everybody reading that book if you haven't. Amazing book. Doesn't teach you how, but it teaches you the why, and it gives you the framework to understand, wow, this is eye-opening. I'm a sole entrepreneur right here. I should be on the B and I quadrant. And once he sees that, he starts saying to himself, I need to invest in multifamily. I want this real estate thing. He goes out, we call him the DTS, direct to seller. First deal is a 16 unit, $675,000 with 100 grand. We look at that now and we go, that's an absolute home run. He walks into a banker. The banker goes, Mr. Aaron Ford, I don't know what you're talking about. 25-year AMs. I don't know what you're smoking. This deal ain't working for me. I'll see you. Wouldn't want to be you. But Aaron sees a webinar by Jamie Gruber, Jake and Gino's student, looking at a 16-unit deal up in Michigan. They crush it. Him and Benoit close the deal, 16 units, life-changing deal. They end up refining that deal. You see that. You say, hey, you know what? Let me get on a call with Jamie, because that's what the Jake and Gino community is all about. You're just reaching out, you're networking, asking questions, and he gives you the right advice. Keep plugging away. There is the right person for that deal. And from that 16-unit deal, 32, 36, 8, 10, 21, 64, then he hits a wall. He's like, man, I'm buying these things. I'm financing these things. Oh, the wheel. I think the wheel needs a little bit of air. I got to put some air in that wheel. And he says, let me call Jake and Gino up. I love these guys. They've showed me how to do the buy and finance. I just need a couple of tweaks. I don't need to reinvent the wheel. The wheel is there. I've been doing it. I've been doing it in my business. Let me look at really multifamily as a business, as an entrepreneurial venture. And once I do that, everything changes. My limiting beliefs of saying I can't find the right property management company. No, we're going to teach you how to find the property management company. We're going to set the expectations. We're going to set the KPIs, and you don't have to have your phone next to you to try to solve every stinking problem. You want to learn how to empower these management companies, and to see that from 0 to 250 units, and then all of a sudden, hey, I've got that down. I'm setting that up. And the future is going to be great because I understand that component, and I'm going to go out and continue to do relationships. I love hunting deals. I'm going to continue hunting deals, and I may not be able to buy something in the next 2 to 3 months, but within the next year, I know I'm positioned right. And when these rates drop, I'm going to pull out some money, refi that money, and put it into the next deals. The future is looking pretty good, Mr. Aaron Ford. I mean, if he learned the technology aspect of it, he'd be king, but we'll let the technology aspect go on the side. Any final thoughts? Any final words from you, my friend?
No, that is a fantastic recap. It's a pleasure to be part of the community. I look forward to the deals that can be done through this. I've been to one live event as well already with the with all the students, and made already lifetime connections there. We'll be seeing you in a couple of weeks, so let's make it happen.
Yes, I want to thank Aaron for being a fantastic guest on the show and sharing his movers and shakers story. It's a personal story. It's an amazing journey. If you want to be the next movers and shakers guest, email Mackenzie at jakeandgino.com. Let's go out there and let's make it a movers and shakers week, everyone. Thanks, Aaron.
Thanks, Gino.